Hello, BSmart viewers. Welcome back to another engaging episode of Manager's Mantra, where we connect with industry leaders shaping the future of business management. Today, we have with us Karan Mohla, General Partner at BCapital, a Singapore headquartered venture capital firm with a strategic partnership with the Boston Consulting Group. Karan leads early stage investments in India and Southeast Asia. He has over 16 years of venture capital experience and was previously a partner at Chirate Ventures. Karan is known for backing founders building infrastructure first companies, particularly in fintech, digital health, and enterprise SaaS. He has backed several companies from seed to scale and frequently writes and speaks on innovation models in India. Without waiting further, let's jump right into this insightful discussion. Hi, Karan. First of all, a very good afternoon to you and a warm welcome to this new session of Manager's Mantra. We're really glad to have you and we thank you for your participation in this session. And, I'm sure that the viewers will just love this session.
No, thanks so much for having me, Abhishek. Very excited to be here. It's a very unique platform that you guys are building, and happy to share our thoughts and look forward to the conversation.
Sure. Thank you. We can't wait to, look for you start the conversation, and I'll start straight away discussing the questions with you. So, my first question to you would be, of course, about the evolution of the VC landscape. So, Karan, what has fundamentally changed in the venture capital landscape over the past few years? How has the investor mindset evolved around maybe risk, capital efficiency, long-term value creation, especially after the 2021-22 cycle?
So, there's, I think, many different ways to look at it. As I sort of think about my last 16 odd years in this industry, I really try and think of it in three phases. I think one was the first, 2008 onwards for 5 to 7 years, which was really building companies and really testing the theory that can you build venture scale from India at speed? Because besides, before that, I think IT services had played out very well. But beyond that, it was hard. So I think the first, if you look at the early wave of e-commerce, software, and then which became SaaS over time, the evolution of how fintech, the early parts of fintech really played out much before, DPI. And I think that really created scale in a venture way, which, where we're seeing a lot of the strong pillar companies that have been listed in India today. I think the second wave really till about 2022, 2023 or so was really about capital abundance and speed. And the 2020 to 2021 period was sort of a microcosm, right? Where there was so much capital that was available. It may or may not have justified every business that was being built at that time, and certainly maybe not at the valuations. And that was a bit of a learning experience, I think, for all of us in the ecosystem. I think I'm most excited about this third part because this is what at least I call building institutional maturity. And that's had multiple learnings and components to it. I think one of it is how capital gets deployed, how sectors become much more deeper, how the talent pool and the ways companies and founders and management and operators think about it is very different. And you're also getting more and more nuanced India opportunities, which I think we all realized maybe 10 years ago, but we really didn't see it at scale other than the last 2 to 3 years, 2 to 4 years. As part of that, we're also seeing how the exit and liquidity market in India has come of age in many ways. If you look at public markets, this is the most one of the most active public markets anywhere in the world, and we'll talk more about that. And that's been a great journey. I think on the capital side, if I go back to it, from being very sector specific, sector agnostic, stage agnostic, generalist investors, you're getting a bifurcation of sector specialists, stage specialists. And I think that's been helpful for creating the depth in the market system, both at venture, growth, and early stage. But it's also about being able to help the founders in terms of what they need at that stage of their business. That's been a learning, I think, for how capital becomes an important part of the overall ecosystem in India. If I look at how BCapital's own approach has evolved in the last 6, 7 years that we've been active, I think we were much more focused on growth in really late stage companies. But we realized that we also wanted to come a bit earlier in how we can support companies and founders. And when I joined about 4.5 years back, I think that's where we started coming in more at venture. And I think today we play in that key part between venture and early growth, where companies need support of a different type. Um, and I think there's a lot more to unpack, but I think if I go back to your question on capital, opportunities, founders, exit, I think that's been, we've touched upon some of the elements, how the overall ecosystem has evolved. And I think, like I said, I'm most excited that I've been in 16 years today.
Thank you, Karan. So, obviously, when we talk about investments, the term profitability cannot be ignored at all. But I think the focus on profitability, what we are seeing today, is much, much more. And today, there's a perception that investors today are less patient and more focused on near-term fundamentals. So, how do you actually see this balance playing out, particularly in AI-driven businesses that require longer gestation periods, but then also promise outsized incomes?
And I think the way I would look at that is there's two parts to it, or two ways to look at it. One is companies which are a little bit more capital efficient, are serving needs of customers, where you actually get to product market fit, scalability, and profitability sooner. Um, and a great example of that is the new age consumer brands that we're seeing across categories. I think that market has been proven for that type of model. On the other side, companies which are building in emerging areas, AI is definitely one, and we're very early in that inning, especially in India. And we'll talk more about that. But um, whether you look at building fintech infra, whether you look at deep tech, whether you look at energy transition, now in each of these, as well as in consumer brands, if you step back, the reality is it takes 10 to 15 years to build an enduring company. Now, the time to go public has shortened, and companies and founders have realized that you can get public institutional clarity much earlier than what was actually possible earlier. Now, over time, what you actually see is that you can get a lot of traction, but really there aren't any shortcuts to building something that lasts. And I think having institutional and structural patience is a very important part of what it takes to build a good investment platform as well. Um, for getting to profitability, I think there was probably a period of time in the um, post 2022 period where capital was a bit scarce for a period of time, where I think there was a lot of focus in, if not profitability, at least making sure there is unit economics sustainability and businesses are able to have a sustainable business, which then requires additional capital for growth. I think that again, there's been an evolution in the last few years, and then there will continue to be that evolution because you know for certain new areas where we've seen India having a great structural advantage, either for the domestic market or for outside. Um, you need to have patience and you need to have capital, which will ultimately be able to help companies through cycles. For markets and opportunities which are a bit more proven, you don't necessarily need to have that level of patience. It doesn't mean you should or you shouldn't. But ultimately, it goes back to what is for a founder, and then I'll talk about the investor. For a founder, what is the kind of business that you want to build? If you're building for long-term endurability, then you build it a different way. If you're building it for short-term growth, then you build it a different way. And for each, there are investors who've got, the alignment there. I think having that alignment is very important because if there's a mismatch on what the investor is looking at versus what the founder really wants to do, then it's very hard. These are long-term, 10-year long relationships. It's very difficult to break in the middle. And so that's the one thing that at least as an investor, I'm always mindful of is my alignment there with how the founder is thinking about it.
Thank you, Karan. Karan, as you know, no discussions today is complete without discussing AI. It has become a dominant theme globally. We would like to know that how is AI shaping how you evaluate opportunities today, and not just in terms of technology, but in terms of talent, operating models.
I think, and we were just in India over the last 4 5 days with our chairman Howard Morgan, and we had the opportunity to meet with, among many other folks, the team at India AI Mission, and obviously they're doing some amazing work over there. Um, I think there are, again, 2 points of view or two ways to look at the opportunity in AI from India. I think one is building in AI for India and the opportunities that are there either in consumer AI today and over time what will be there for enterprise adoptability or B2B use cases. And then there is building AI for for the world. Doesn't necessarily have to be the US. It could also be for other emerging markets. The fact is, India had certain advantages in services and in software and SaaS, which are to some extent or to a large extent actually um, lesser now in the age of AI because cost becomes a relative advantage, but not a very big one. And so you have to think what are some of the other moats that you can create. I think India, and one area that we're very excited about, honestly, is the whole AI-enabled services because India actually still has the largest talent base, the know-how, the approach that actually works in helping adopt AI for large enterprises globally, and how to support that implementation and the entire process of change transformation over a period of time. I think that's an area that we're spending a lot of time. And it's not you want to make one investment or two. Actually, sector by sector or industry by industry or functional use case by use case, you can actually make multiple investments because what a company that's for working in financial services in AI enabled with an AI enabled services model will be very different than one in manufacturing because data is different, how you implement AI solutions is different, and how you continue to use them and evolve them is very different in terms of context. So we think that's a very, very large area for India to be focused on, and Indian entrepreneurs to be focused on. Fortunately, with our partnership with BCG, they are an important layer in how enterprises want to adopt AI. So we're able to bring the capital, we're able to bring the know-how of how to help create that change transformation. We're also able to help bring the know-how between India and the US, where Asia and the US, where we primarily operate. So I think that's a very important focus area for us. If I look at the India side, um, there is so much disparate data and context in the real world use cases within India that is hard to get into the large foundation models. Of course, all the models, whether it's Gemini, Claude, or ChatGPT, have India as the second largest user base anywhere in the world. So they're present already. They're deeply ingrained. I think you can build on top of the foundation models in terms of having the orchestration layer or the tooling layer that enables the use of these models better, or in helping with getting the right data to work within that model. And the layer above that, which is the application layer, I think India will have multiple winners from that sort of a business use case. I'd say in the next 5 years, we should be having anywhere from 20 to 40 unicorns from India that are building in AI applications because the need is there, the talent is there, the opportunity is there, and you're being able to build on top of these foundation models. So I think um, it will change the way consumers as well as how businesses interact. And what we've seen, the AI Summit was a great encapsulation of it. Indian users are very open to the change in some ways more so than some of the other countries because we've been through that journey with UPI and financial payments as one example, right? So we've seen how technology transformation and the leap cycles happen in a much shorter time. So, like I said, I think within India, within our India for India focus, we think there's a lot to be done, and it can take the shape or form of transactional models such as commerce and consumer AI. It can take the form of development industries like health and education, or it can take the form of entertainment, which is, how entertainment is consumed and developed and distributed will be in a very different way in the next 5 years.
Thank you so much. That was really insightful. Let us talk about India's startup ecosystem. There has been a significant maturity in the startup ecosystem in India over the last decade. Now, where do you see the strongest opportunities emerging? And what do you think are the gaps that still need to be addressed for India to produce, large scale global scale companies?
And maybe I take AI first companies as one. And I can pick up on a couple of others, but um, for building global first companies, you need a technology capability that becomes a moat over a period of time. As technology and the capabilities become more at parity, I think India has every bit of a good chance to be at the forefront of that innovation as any other country or any other ecosystem in the world. Because talent and operational excellence is how, yeah, I feel are two of the biggest strengths India has. India is not an easy place to do business, right? To build a large business in India or to build a business out of India, you need a lot of resilience and tenacity. So if you can have the building blocks well set, then to build on top of that for global markets requires best in class talent outside of India, best in class technology that you can export, and then creating the right levels of distribution modes over a period of time. And that's sort of industry agnostic. If I look at another example of an industry which we're excited about and we think India has every bit of an opportunity to be successful is around space tech. Because with what the government has done in creating the progressive policy in allowing FDI, in what ISRO has done working with private players, in what bodies like InSpace are trying to do, which is really create the bridge between startups and, let's say, government bodies as first adopters. I mean, there's so much in the ecosystem, and the talent which has come out of both DRDO and ISRO. There is so much of the elements that you need for an industry to succeed. I think the next level of that industry really requires a deep level of commercialization. And we've seen in the US that ecosystems developed over the last 15, 20 years. So space is an area that we think will be very attractive for Indian companies, not to build just for India, but really use the India market as a learning opportunity, serve Indian customers, and then take those capabilities outside. Again, not necessarily to go to the US. There are large markets in Singapore, in Japan, in Europe, which can be well served by India, where you can actually get the same sort of yield from customers as you would in the US. And I think though that's an example of one area where we think India will have a fairly unfair advantage. We're also excited about industries like advanced manufacturing with what is required in terms of getting manufacturing capacity built out in India. Again, not just for India, but again, building it for the world. And areas like robotics and other elements of deep tech, because for the same reasons I talk about space, I think those same criteria apply very much to each one of these categories. And these are all global opportunities.
Sure. Thank you. Thank you so much. So now talking about startups, with more founders entering the startup ecosystem, this seriously need more capital, and the competition for capital is increasing. Now, what genuinely differentiates the early stage teams that capture investor attention today?
So I'll go back to the point that I made. I think just the big realization, and maybe it's a very obvious one, but you realize the more you are working in the Indian context, it's a hard place to build large businesses because there are so many friction points. But it's also probably one of the most attractive places to build. And as an Indian, I take great pride in being able to be part of the ecosystem. So the first thing, which is very different than, let's say, a lot of the Western economies, is just focus on operational and executional excellence. And this may be, people may not, unless you built a business in India, I think it's hard to identify with this because you have to go through so many, friction points as everything around you is also developing. Um, Folks who are able to think through, what are the steps that I need to be successful today, but also what are the steps that I need to be successful over the next 2 to 3 years, and then plan backwards in being able to create that level of operational excellence, which is equally true, by the way, if you have a very operationally intensive business, or if you just have a, network-based business, whether it's in, gaming or software traditionally. So I think that's the first mindset. I think the second is really around resilience and adaptability. You know, in any ecosystem in the world, there will be changes in how a business is built, as how the market evolves, what are the what are the driving factors, and you will have occasional pivots of business as well. So having a pragmatic approach to building a business while having the tenacity to be able to adapt to that pragmatism, I think are two very important characteristics in an early stage team and in a founder. And then the third is just having obsessive passion, because building, it's a lonely business. It can be lonely. It is generally very hard. You will have more down days and up days. So if you don't have genuine passion and obsessiveness to build in the area that you're keen on, you may find it's not worth your time. And I think that's why entrepreneurship is not for everybody. Being a founder is not for everybody because it's that obsessiveness and that passion that takes you through the rough days. And as you adapt through, a lot of these ups and downs of any business journey, that's also what creates execution obsession, because you realize you have to be able to work in that way to be able to, continue building the business. So I think to me, yeah, I obviously want some founders who are thinking big and have a large vision. I think that's a very given. That should be true for a founder anywhere in the world. I think specifically in India, I try and look at these three things because that's where, for me, I've seen outliers in both founders I've worked with, also founders that I've seen operate at that level.
Thank you, Karan. Thank you. Karan, I'm sure you will agree that venture investing involves making high conviction decisions, but then you have incomplete and lack of information. But so then, how do you approach the decision making in such uncertain situations, environments, and how do you think an MBA stint can help in developing your decision making and strategic thinking skills? And how has it helped you?
So, one thing that Howard says is it's not, you may make a wrong decision in passing on a company because your thought process or your decision, the way how you applied it for that situation may have not been correct because some assumptions are wrong. But the mistake you should not make is not seeing that company. And so, because then you're not even being able to make a decision. So I think that's, as a VC, that's the most important thing to remember is see as much as you can, be out there as much as you can. And you won't know if you're right or wrong for many years to come. The company may have raised hundreds of millions of dollars, maybe at a great valuation, but if you've not created exit from that company, it's still in theory. So I think then it's important to look at what is what goes in between that end point and the starting point. And maybe also I'll touch upon where an MBA becomes important. Generally, being a VC investor, especially in early stage, more often than not, you have to take, more often than not all the time, you have to take a slightly contrarian view or a view that may not be popular with many folks. And you have to really stick to your beliefs. And the question is then, how do you come up with those beliefs? If everybody is agreeing with you, then I think the question that comes to me sometimes is that, well, if it's so obvious, then why is this opportunity at this time going to be this big return? Versus if it creates a lot of debate and strong reactions in people in the negative, I actually think that's a good thing because you're like, well, they're probably onto something here. Now, whether it's the right thing or wrong thing or their approach is right or wrong, that's TBD. So for me, that's a mental model that works, and it's not easy. Like I think it's the default option for a lot of people to go with the consensus because you feel more safer in that decision. But for true outliers, actually having a contrarian view is more often the case than not. So I think that's one thing to really think about. Um, because you also want people who will challenge your assumptions. If everybody's agreeing, then it may or may not be the way you think it should turn out. Because then what is so special about that particular opportunity, that point of time? So you want people to be able to push you. And at least in our case, our our IC is our IC and our decision making is really designed to test that. Because if we indulge in groupthink, then we may not get the alpha that we want. Um, at the same time, while it's important to have, so that's one part of it. I think the second part, which while it's important to have high conviction and belief, because it's you're driving most of the things yourself, even if you're part of a team. But you have to have the right sort of humility to be able to understand and accept when things go wrong or when you were wrong, for having those assumptions, and then taking the right sort of corrective measures. And as a VC investor, will probably be slightly more wrong than you are right. That's just the law of the game. So it's when you have that level of base realization to say, I'm going to try and be intellectually honest with myself, at least, to say, where did I go wrong and how can I feed that back into my decision making? That becomes important so you don't make the same mistake another time. And I think that's a very important part of learning to be, if not a better investor, a more thoughtful investor. So that's the second. A third is, and this is where I think the MBA plays a big role, is really creating the right type of um, networks and diverse networks to help you, whether it's on sourcing companies, whether it's helping evaluate certain parts of the business, whether it's helping acquire talent for that business, whether it's helping with getting potential customers or partners for that business post investment, whether it's helping for new rounds of financing or for liquidity or any sort of expansion. You need networks and people around you to be able to help the company. And I think an MBA gives you access to that network, hopefully for life. So I think contributing back to that network is important because in a community, people will only give you as much as you give them. So I think that's something which, when I did my MBA, and I've been fortunate to get a lot out of my alumni ecosystem. I think that really helps because you need to continue building and evolving and enhancing in your network. Um, and ultimately, you need to have people around you who are smarter than you, who are more diverse in their thought process than you, and people who you can confide in because you trust their judgment, you trust that they're looking out for your best interests, because you will be more wrong and you will have multiple moments of doubts every day. So you want people who are able to be your support system. I think for me, the mental model of decision making really tries to cover these 3, 4 aspects. And it's tough to get all of these right all at the same time. When you do, that's when if I look back, I think that's where the outlier investments come out of. So if you get 3 out of these 4, you'll still hopefully end up with a good outcome. Of course, the the beauty and the fallacy about VC investing is it is a reflected glory because you're standing on someone else's shoulders as they build a business. But you can only do so much. So in being able to make sure you are standing on the shoulder of the right person at the right time for the right business, you have to have something that gets you there. So hopefully those 3, 4 things are what actually get you there.
Thank you so much, Karan. So, as you know, a lot of young MBAs would aspire to be in the VC space to join venture capital firms like you. We just discussed about decision-making skills, but beyond that, what are some of the most important skills that they should have to, achieve success in the sector? And what are probably the misconceptions people have of working in VC? We are facing a situation, amid the different geopolitical tensions, conflicts. Has a space become more challenging What do you think, amid those challenges can be some of the best opportunities in the space?
So I think the first thing to remember about being VC is it's really an apprenticeship. I think you learn your craft for at least 3 to 5 years before you can start, even before you should start about being in a position to make decisions. Because unless you've been a founder who's built a business, doesn't have to be a great large outcome, but the journey of the zero, of the -1 to zero and zero to one is so profound that if you don't have that in your back pocket, then you have to learn it through experience. That was my journey. And I've seen people who've taken that path. I think they're able to skip that first leg of it within 2 years. What took me 4 to 5 years, I think would probably take someone who's built less than half of that. So understanding the apprenticeship model is very important. Find people who are willing to work with you, help you, give you feedback, and keep giving you more and more to be able to do. I think that's the single most important thing. If I go back to the previous question, because that touches upon some of the things which I think are important, you need high degrees of conviction, but you need intellectual curiosity at all times. Your convictions can't be based on feelings or thoughts or anecdotes. You have to have very hard scientific rigor in how you build your conviction, and at the same time, they need to be loosely held. You cannot have high conviction, hardly held, ever held in a very tight way, sorry, because then you are just operating in your own paradigm, and you may end up being right, but that's pure luck then. So I think that's one thing that's important. The second is, I often feel people who are in a position in a venture firm to make decisions lack founder empathy. And unless you built a business, you don't know what it's like. I've learned it over a period of time. Having founder empathy and what the founder is going through at that point of time is so important, because then you are able to understand, as much as they have taken your capital, they're also building a business. They have other things to manage. And having the balance to be able to, share your views strongly, but also have empathy is very important. At the end of the day, as a VC, you are in this position of being the provider of capital, mostly other people's capital. So it's that position which gives you that power. So while you have very deep fiduciary responsibility to that capital, you also have to understand it is not because of what you have done necessarily that you are in that position. So understanding your role in that ecosystem, of the mini ecosystem of those three people, is very important. Never to lose sight of it. The best VCs that I've met, at least the ones I admire, at the height of their success, are the most humble people, because they also know that they've been more wrong than right. So whether you are starting or whether you've done it for 40 years, I think you have to have great humility. And again, I look at the people I've had the opportunity to work with and learn from. I mean, they practice that day in, day out. So I think those are the three things which are important, at least that I've seen work well. What I think the biggest misconception is, I guess it is glamorous, or it can be glamorous, but you're going to be more wrong than right. And learning to deal with that level of um, failure in a way is important. You can't get it done. You have to be an optimist. The intensity, I think founders are the hardest workers. VCs aren't that far behind, because the amount you have to work for getting into the right companies, to have the conviction, and then continue to back that over a period of 7 to 15 years. I think, it takes a lot, and it requires a lot of intensity, and the same obsessive passion in a different way. I think being a founder is the hardest job, but being someone who is the provider of capital to that founder, you have also less control in the outcome. And so it's intense and difficult in a very different way. And I think people don't understand that, because, there is such compounding of uncertainty over a period of time, even if a company is doing well, that you have to know how to deal with that and keep that in part of your day-to-day operations.
Thank you so much, Karan. With that, we come to the end of this session. It was really a very insightful session, and the viewers would just love the session, and I'm sure that there would be a great amount of learning that they can take from this session. Uh, we would love to stay connected with you and have you again for some of our future sessions. Thank you so much.
No, thank you, Abhishek. It was great having this conversation, and hopefully, I was able to give some insights from my experience. And I think, look, I'll end by saying this is the best time to be a founder. This is the best time to be in venture in India. I've never been as excited as I am now, and so hopefully, this leaves everybody with some pieces of insight.
Of course, that will.
So that's a wrap on this episode of Manager's Mantra. Thank you, Karan, for sharing your insights on the evolving venture capital landscape and providing career suggestions for management students. BSmart viewers, we hope you found this conversation helpful. Share your thoughts with us at bsmart.edit@bsml.in. Follow us on LinkedIn and Instagram for more such insightful and inspiring content. Until next time, keep learning, keep growing.